Hello traders, this is Daniel with VantagePoint AI, and I want to talk to you today about ETFs. I mean exchange traded funds. ETFs are basically an asset that trades like a stock, has a share price, you can enter and exit positions just like a stock, but they follow a basket of stocks or maybe an industry or an indice, for instance. Take a look at the screen, let's talk about this. What I'm looking at right now is the Dow Jones, the E-mini Dow. And if you look at the screen, you can see over the last 9 months or so, there's been some really great trends projected with the Dow. With the blue line way back here in January forecasted an uptrend, the Neural Index agreed. I'm on the left-hand side of the screen right here where you can see all three predictive differences were pointing up. And if we follow through this, we can see some very, very powerful trends predicted with the artificial intelligence all the way up to today. The reason I'm showing you this is so that you can get a bearing on what we're talking about. This is the performance of the index, the Dow. Now, in addition to that, there is an ETF that tracks the Dow. It's the diamonds. If you're not already trading the diamonds or you're not trading the Dow, this is a great way to get extra confirmation about what the index is expected to do. Because remember, in VantagePoint, the intermarkets are custom according to the target market. So the intermarkets for diamonds is going to be slightly different than the intermarkets for the E-mini Dow. So having the ETF is going to give you extra confirmation about where the Dow is expected to go. Let me show you on the screen. If I take the diamonds now and I move it down here to the bottom portion of the screen, we're going to get a split view. You know what, let's hide the predictive differences so I can make this point here very clearly. And the split view that I just put on the screen is the Dow, the E-mini Dow on the top, and diamonds on the bottom. And you can see the crossovers, even though they're calculated completely independently, crossover at virtually the same time in most of these cases. I'm just drawing a line so you can see this crossover right here. And in this one, it looks like the diamonds, the ETF, had an earlier indication of that crossover versus the actual index itself. Look, if I draw this line right here, you can see it's a day sooner. So when I mean confirmation, what I mean is if I'm going to trade some stocks that are on the Dow or I track the Dow, this is a great way with the ETFs to get that extra confirmation about what's going on in the Dow. Let's take a look at another one. Here's the Qs. I'm going to get rid of this chart down here so that we can get that off the screen since you understand how now it tracks the index itself. The Qs follows the NASDAQ. Now, if you're a tech trader and you've got a lot of tech stocks that are on the NASDAQ in your portfolio, this is a great way to get extra confirmation. Look at this. The crossovers are very clear to see. The forecasts have been extremely, extremely valuable. Now, remember, you can trade these just like a stock. So you stock traders out there, you options traders that are doing stocks, ETFs are no different. You can buy and sell them just like you do a stock today. So if I had 10 contracts on this, options contracts, and I did 10 calls, I'm controlling 1,000 shares, you can see very easily how that's about a $25,000 profit right here at the beginning of the year. Now there's several trades and trends that were forecasted with the software, and if I just went crossover to crossover to show you the real value in having access to the ETFs, take a look at this. I'm just drawing rough lines, but I want you to see how valuable it is to be able to use the ETF forecasts just like it would be a stock forecasts. Now we've got a little bit of information over here where there's an uptrend and a downtrend. We've got let's call it a couple of losers right here, which is okay. Remember, VantagePoint forecast ETFs and stocks and the other markets with over 80% accuracy, giving you extra confirmation. So if I call these two losing trades right here or move these down here and say, you know what, the forecast didn't work out there, but here, again, from crossover to crossover, I'm just putting the winners at the top and I've got the losers down to the bottom from a trade standpoint. And if you were looking at this, having this ETF, having the Qs as part of your portfolio and trading the Qs just like you would a stock, you can see the underlying asset, the actual ETF itself, is up 25, 30, 35% this year, trading both up and down, long and short. So having this as part of your portfolio gives you not only extra confirmation as far as what's going on with the NASDAQ, but you can trade it just like a stock, giving you extra diversity looking at a bigger basket of stocks. Because remember, this is talking about all of the stocks on the NASDAQ when we're talking about the Qs. Here's another great way, sector-based ETFs. What I have on the screen right now is the biotech sector. Some of you may be trading some biotech stocks. Here's a great way for you to get extra confirmation around where that sector is going. Plus, don't forget it trades just like a stock would. So when the blue line crossed below and the neural index agreed and everything was forecasted to go down, you can see how very quickly this ETF turns extremely, extremely profitable to the short side. And that's the great thing about ETFs. We're going to get into this in a second, but there's inverse ETFs. So when the market is going down, these ETFs are going up, which gives you the flexibility if you're 401k trading or you've got you don't go short, you can go long an inverse ETF. I'm going to show you that in a second. But first, I want to draw your attention to one thing. I'm going to pull on biotelemetry and I'm going to do the same thing. I'm going to put it on split screen for you. Let's get rid of the predictive differences so you can see the real chart movement. Now you can see the ETF for the biotech ETF reversed right here on 9/23. Now biotelemetry is a stock that's part of that sector, and you can see the forecast and the crossover happened on 9/23 as well. So the crossover happened at the same time. Now here's the extra confirmation. The neural index on that stock is green, indicating, wait, this may not be an entry yet, and the neural index turns red the next day. I already had that advanced notice by looking at the ETF because the neural index was red for a long time before that, indicating there was weakness in the overall sector. Think about that. If you can get an indication of whether or not there's strength or weakness in that sector before you go trade a stock in that sector, that's going to give you advanced notification. It's going to give you an early warning and extra confirmation about the position you're looking to take. Here's one of those ETFs that's an inverse. Look, I just put the inverse ETF on the screen. Again, I'm going to remove those differences there. The reason I wanted to show you this is because if I put this right below the biotech sector, you can see how this is an exact inverse. So those of you that don't short, here's a great way to get extra flexibility when the market is going down. On the top, I've got the S&P biotech ETF sector forecasted to go down as 9/23 as we discussed. But on the bottom, I've got the biotech bear 3 times. That's a triple leveraged inverse ETF, meaning that gives me 3 times the ability to make money in that market to the upside. Look at the share price. The biotech ETF on the top, XBI, is about $75 a share, and the ETF on the bottom, the 3 times, is only about $25 a share. I can get 3 times as many shares and trade to the long side even when the biotech sector is going down. This gives me more diversity that I don't have today if I'm not looking at these ETFs. And they're very profitable. If I took one position from this crossover here until the closing bell of yesterday, right here on the inverse ETF, that's about a 30% profit. You can see that, $5.92 per share. If you had 1,000 shares of that, that's almost a $6,000 profit in something you may not be looking at or you may not be trading today. And there's a whole host of them. Let me show you. Here's UNG. Again, I'm going to get rid of this bottom category down here because I want you to see if you're not trading natural gas in the futures market, or even if you are, having the ETF that follows a natural gas fund will give you extra diversity and extra confirmation. Take a look at what I mean. Right here in the middle of the screen, we got a crossover on 8/15. The neural index agreed. All the predictive differences are pointing up. Even if I don't trade the futures market, I now have exposure to natural gas as a stock trader, as a stock options trader, or ETF trader, because this trend is a very clear forecast. And if I just went crossover to crossover right here on this trend, that's about 14% profit in 27 trading days. You can see it there on the screen. But the key here is that you get exposure. You don't have to go trade the natural gas stock, if you will, or stocks that produce or do something in the natural gas industry. I can get the overall industry itself, or the commodity itself, however you look at it, through the ETF UNG. Okay, here's another one, GasX. Now the reason I'm showing you this is because this is the inverse. I'm going to go to split screen again. And why I'm doing split screen, because I want you to see how valuable it is to have inverse ETFs along with the standard ETF. Here we go. Look at the right-hand side of the screen. The blue line crossed below the black line on UNG, the natural gas ETF on 9/24, right? Indicating the natural gas is expected to start going down. Well, if I don't trade short, or for some reason my platform, I don't have the flexibility to go down, or I'm not buying puts or selling calls, I can simply go over to GasX. Funny but not funny. I can simply go over to GasX and trade to the long side because that is an inverse ETF. Now, if I did that and I just went crossover to the closing bell yesterday to the long side when natural gas was going down, this is a $21 per share profit in 7 trading days. Again, just 100 shares of that is over a $2,000 profit. That's why it's so valuable to have these ETFs for the extra confirmation. And so when the market reverses, moving over to those inverse ETFs gives you extra diversity. Now let's keep talking about diversity. Here's another one you may not be trading today. Right now it's DBA, all right? This is an agricultural fund. Some of you may not be trading wheat and corn. A lot of you aren't. You're trading stocks. But you know that the ags like that are very, very trendy. Well, having this ETF gives you the diversity to be able to go and trade that, and it trades just like a stock. You don't need any extra education about the futures markets. You can simply use the predictive indicators, the artificial intelligence already in your software to trade a market that you may not be trading today that is extremely trendy. Look, I've got 2 trends on this chart right now in DBA, and if I just go crossover to crossover, you can see how this would have produced about 12% profit now. We're talking about in just 2 trends, about $2 per share. Again, a very valuable asset to have as part of your portfolio. Here's another one, the Treasury Bond. We all know the Treasury Bond is running up. It's been running up for weeks, but take a look at this. TBT is the ticker. That's an inverse ETS for the Treasury Bond. Why is that valuable? When the Treasury Bond is going down, this ETF is going up. You can see right here in the middle of the screen on 9/6, we had that forecast. And if I went crossover to crossover, when the Treasury Bond was going down, this ETF was going up and produced $1.61 per share, about 7%, 11 trading days. That's over 0.5% a day in a market that was going down, but using the inverse ETF. Now, when the Treasury bonds reverse and they start going down, this is another opportunity that I can switch over to TBT, get some extra diversity, and pick up some profits where you might be missing some profits today. These ETFs are available in the software. If you take a look on the left-hand side of the screen here, I've opened up the market tree. There's 10 ETF sectors. If you don't have all 10, I would highly recommend getting them. If you have some of them, you may want to add more, especially the leverage bear ETFs, which are 2 and 3 times leverage but inverse, or the leverage bull that follow a regular ETF but they're 2 and 3 times leverage. For those guys that like leverage, those are great sectors to add in conjunction with the other ETF sectors. So if you're not trading ETFs today, hopefully this opened your eyes to some opportunity for some extra confirmation, give you some extra confidence, and give you some diversity in some markets that you're not trading today, but still trade just like stocks. All right? If you have any questions, reach out to your coach. Be glad to answer your questions about the ETFs and how you can add those to your package. Have a great day and best of luck with your trading.